Hello, everyone. I hope that you had a wonderful weekend. Today, here where I am, it's a holiday. Well, I believe that at most places it should be a holiday today, which equates to, us just going out and, touching grass. I can't do that myself due to the fact that currently I am sick. So bear in mind that there will be times whereas I will be speaking and then there will be just a brief pause, which will probably be me coughing or something like that. And I don't want to record that, right? So, yeah, right now my throat is sore. It's not bad, right? It's light, right? But yeah, that's all. So today, Monday, right? May 20, right? There is a reason why I did not go live yesterday. And why is that? I wanted you guys to understand that the price action today is not important. What does that mean? It means that today is a day that you don't really want to do anything, right? Just as how last week you can see how we approach the week. That's the same way. Well, that's a similar way in which we will approach this week. Last week we had most of the volatility on Wednesday. We had the manipulation on Tuesday. Right, this week we might have the manipulation and the volatility on Wednesday. Right, Monday, what do we see today? Not much. We didn't see much today. Today was low probability price action, which is, something most of you should look for whenever we have a day, well, a Monday without news events. Tuesday, you can see that we have no news events as well, right? So tomorrow will be low probability. There is something, right, you can see that is always common, right, with how I approach the markets, which how I approach each day, with how I see each day, right? A day without a news event is seen as low probability to me. Why is that? Because I have no indication, I have no, nothing solid that would, tell me what time to expect volatility, what time to expect a injection of liquidity, right? So the days of this week will be high probability trading days will be when Wednesday, Thursday, and Friday will be higher probability than Monday and Tuesday, but not, high probability for my standard. So the best trading days for this week would be Wednesday and Thursday. You can trade Monday and Tuesday, but if you do that, you'll realize that, okay, I'm getting in here, but the trades don't last a long time because there's not a trend, right? The trend has not been established yet, right? We're still within consolidation. The assets are out of sync. So you have ES and NASDAQ, staying in a range while you have the Dow dropping or going up. And you'll have similar price action across, the other triads, the Forex triad and the interest rate triad. So Wednesday, right, we'll be looking for a lot of volatility, it'll be FOMC. So that's what we will be, that's what we will be expecting, right? Whenever you have 2 days, right, and this is something that you should write down. This is something that is important. This is something that is not common knowledge. Whenever you have days like this, where you have Wednesday and Thursday, the other days of the week after Tuesday, having all of the news events, these days are usually have very high in probability, right? So Monday and Tuesday, when you have blank days, there's no news events, right? The high and the low of the week will usually form between Wednesday and Thursday, right? So why between Wednesday and Thursday? Because there'll be some assets that will put their low or the high of the week on, or post their low or high of the week on Wednesday. Then the others will do it on Thursday. So the sequential SMT will occur between Wednesday and Thursday. Basically, that's what I'm trying to say. More times than not, right? In the asset classes which are posed to go in one direction, right? So Wednesday and Thursday, the best days to trade. And even though Monday, as you saw today, is low probability, trash price action, and Tuesday will, more than likely not give us the cleanest price action of the week, it's still, something good in my opinion, because that gives me more time to, plan how I'm going to attack Wednesday and Thursday. And it should be something, good for you as well. It tests your patience, right? And this is how you will have comfort in waiting, by knowing that these days right here will give you better price action to trade than these days right here. And there's no way that Monday and Tuesday can give you larger ranges or a larger trend to follow than Wednesday and Thursday. Here, looking at the index futures chart, right, you can see that, and I'll talk about this week soon. Let me go back to where we expected a uptrend. Our previous analysis, right? So everything that you see in the screen right now, right, all of this movement right here, we saw this beforehand, right? All of this. Here, right, let's look at this Monday, last week's Monday. There was no news events. Was there any news events? No, there was not. But something important happened, right? Something very important happened. Here, right, we had the S&P 500 making, a failure swing. And this is, something that occurred with the price action of Monday, right? So Monday is the day which you take the information from, right? Even though here, right, there will be times when Friday, this low, which is the low which would be posted before Monday, right? Even though if this swing low right here is not the lowest low of Friday, if Monday's low, right, is a failure swing, then we'll be looking at it just as how we're looking at the highs right here. So here we had what? We had a failure swing, failed to break above this high. And here, what do we have? What do we have? A failure swing, a failure to break below this low. So price was kept into a range right here, right? Here, same thing again. Failure swing. And here, at the lows, what do we have? A failure swing again, right? So now I hope that this is not confusing to you, right? But this is, by far one of the easiest ways where you can spot a reversal, when there is a breach of liquidity, right? So here, right here, it's not really anything to do with, higher time frame P raise, although those will help, right? But it's just that here we had what? Failure swing right here. Then here again, oh, we have a failure swing again. This happens right between the two most prominent, members of the triad that you're looking at, right? So between the S&P 500 and Nasdaq, we have symmetrical price action, right? But within the Dow now, this is what we have, right? We have the Dow breaching this high right here, which created sequential SMT, on a Monday, which sent price lower for the liquidity below this low. Here, what do we have again? We had price, trade below this low right here, then return into the range before, taking one last step to get everyone that was, already long out and breaking below this low, which would also trigger sell stops, right? Accumulating liquidity, which is what the algorithm is doing right here, right? So this right here that you see happening is algorithmic, right? This right here that you see is not something that that the normal eye would see. Why? Because they're not looking at triads. They're looking at, one asset class. They're looking at one, pattern. They might see this within the Dow, but they won't be comparing it to the S&P 500 and the Nasdaq, right? So here, what do we have? We have this, which was a range being formed. And as you can see, these are two totally, these ranges comparing the S&P 500 and the Dow, it's two different types of ranges, right? Here, as you guys can see, again, I'll do this one last time. It's two different types of ranges, right? As you can see. So here we have higher high, lower low. This is where you'll see that, okay, this is real liquidity, right? The only thing that you'd be looking for now is when price trades below that low, you would want to see a precision swing point, right? Which we did see, right? Which is why, right, even on the stream that we did, what did we expect? We expected higher prices. And what did we get? That's what we got, right? And we'll be, attempting to do that this week again, which is not a invitation for you to just place a trade without doing analysis, right? It's not an invitation for you to do that, even though more times than not, we will be correct. And this is only due to the fact that we are following the algorithmic nature of price. We're doing something or anticipating something that price has, been doing over and over again since the beginning of price itself. Why is today considered as low probability, right? First of all, it's a Monday without news events. And here you can see the Dow trending lower while we have the Nasdaq basically, not doing much. And then we had the S&P 500 barely doing anything at all, right? So today, and tomorrow as well will not be the best days to trade. The best days to trade, whereas we had, look here, all of this, the manipulation and the distribution here, what happened? There was high impact news events, right? High impact news events. That's what we wait for. That's what will give us these types of moves. Right here, high impact news events, price moving. Right here, high impact news event, price moving here. No high impact news events. What happened? Nothing. Right? So it should be pretty easy for you to understand that when there is no high impact news event, you have liquidity being built on both sides, right? And it is also visual liquidity, just as here we had the higher high and the lower low, right? So turtle soup for at least one of the assets, right? Turtle soup will be the high, turtle soup will be the low, then price will return to the equilibrium of the range. There's usually a fair value gap within the equilibrium of the range. Just there's one right here, right? Now we're looking at the Dow, right? And that right here is usually transferred over to the ladder move. So we will just use the high of this fair value gap, which turned into a inverse fair value gap right here, right? So turtle soup here, price ran below this low, returned to the equilibrium, broke below this low, right? Tricking short sellers, everyone that shorted right here took this, what is it, ICT 2022 model, then, aiming for this low and this low. But what they didn't see is that here, right, this was a failure swing and this was a failure swing. And then they did not see this right here. What is this? They did not see this precision swing point. And most importantly, they did not see the intermarket sequential SMT, right? So what's something that you should look for, right? You have, first of all, the days prior to the day that you're planning to trade, right? You're looking for a swing trade or an intra-week trade or even an intraday trade, or you're just looking for a bias. You're looking to trade in, because right here, looking at the Dow, you can trade this right here, but you'll be stopped out when price came back up. Does that make sense? No, not really. So you're trading, first of all, you need to see a range form, right? You need to see 2 out of 3 of the assets, right, post, failure swings on both sides of liquidity. You want to see, this is why I always say that the best trades, right, occur when we have price action like this, right? Look at the S&P 500 right now, right? Price didn't break above this high. Here, it didn't break below this low. It's still within consolidation. So the day where you have a high impact news event and you see that push of liquidity and you see sequential SMT or intermarket sequential SMT, it's very clear cut. It's very easy to know the direction in which price will go after that, right? It's not hard to understand. So before, right, you get, moves like this, you need moves like this, right? Because if the first thing that, video that you ever saw from me, for educational purposes was that YouTube video, which stated, right, first thing that I ever taught, model, AMD. It's very simple to understand. It's always there. But when is it there within the weekly cycle? When is it there within that specific, amount of time? When is it there? Whenever you have Q1, and you already know this, accumulated. Q1 accumulated, but okay, let's make it more specific. When do you have it during the week? Whenever you have Q1 accumulating, right? And you have, for example, one asset class for the highs posting swing lows, and the other asset class for the lows posting a failure swing. So you have failure swing at the highs and failure swing at the lows. Price is within, right, the range right here. So for example, imagine just as of last week when we anticipated this candle didn't happen yet. Right here, looking at the S&P 500, this candle was not there yet. All that was there was this chop, right? Which is the best thing, right? But whenever there's chop, price is just waiting to inject that, liquidity that, must be injected for price to react this way, right? So it was very obvious, right? Because on Tuesday we had a hyper news event which pushed price below this low. Then it was obvious that price would continue going this high. It was obvious that this was a low of the week. It was obvious that this was a low of the week because this was the only, right, substantial, the only one, the only intermarket sequential SMT that was posted, and it was a precision swing point. If you have a precision swing point here, and I don't believe that we had a sequential SMT here, right? But I'm just saying, well, we did have a sequential SMT here, I believe. But listen, if you have a precision swing point here, and then you have a sequential SMT here, the intermarket sequential SMT will overpower this. This would be seen as a shifter market structure, right? The low on the week is already in. Then what else? For manipulation to occur, you need days, right? Prior to that day that you have the manipulation with no news events, right? So here, this would not be manipulation. Why? Because the day prior to that, there was a day with a news event, right? So Monday and Tuesday, there's no news events. Then Wednesday, price trades below that low, trades below a low, trades above a high. There's the intermarket sequential S&T. There's a precision swing point, and price falls. That's the high of the week, right? Here, price, okay. Here, price trades above this high on Wednesday. There's a news event on that day. There's a news event before that day. Was that manipulation? No. Price is going to continue into that direction. The manipulation is done. Days without news events are used to build liquidity for the algorithm to, run one side, then continue way above the other side afterwards, right? So here, right, this low to this high, this is where your standard deviations would come into play, right? So this is what the algorithm does. You can study that after, right? Liquidity is built on days without news events. On days without news events, there's liquidity being built, right? Price trades below those days, right? Right here, trades below Monday, continuous for the rest of the week. And, that's what we'll always see happening. And this is why on a day without news event, all you do is scalp. If you want to do anything at all, right? For me personally, I would rather to be on this candle or at least this one or this one right here and get out here. That's what I would like to do, but to each their own. Here on the Dow, right? You can see, and let's go back to this. I was talking too much about this, but it's very important to understand, right? It's something that will help you. Also, yeah, let me talk about this too. Remember, and this is, the reason why last week I did the live, same time that I'm doing it now, right? So this time is important, right? 6 o'clock, 6 p.m. that just passed. It's 6:28 right now, Eastern Standard Time. That was the true open of the week, right? You want to see the high or the low of the week, right? Posted after that time, right? And it's more important, it becomes more important whenever because there are certain days, right, that are certain weeks, whereas the low to high week will be on Monday. And when is that? That only occurs, right? Listen to this. That only occurs, and that will be, can be confirmed after, I'll say, Tuesday or Wednesday. That only happens when there is there is sequential SMT between the previous Friday and the current Monday. So last Friday would have sequential SMT between the high of that day and today. And that would, cause price to reverse. But, right, whenever you have price action like this, right, and then you have the only thing that would look, take this, or make these highs not as important, because last week we had sequential SMT here. But what happened here that was more important than this? We had intermarket sequential SMT. So this day, between the days where we had Friday's high, Monday's high, failure swing, Friday's high, Monday's high, right here, look at the Dow, in sequential SMT, price dropped. Intermarket sequential SMT here, and price continued higher, and there was a personal swing point, right? So it's pretty easy to understand, right? If you have SMT at a high, then intermarket sequential SMT at a low with a precision swing point, then that SMT at the high is just a market structure shift if it was a stop run. Okay, now going back to the Dow. Here, right, this fair value gap right here, right, draw it out in time, right, and right here, we were, bullish, right? Someone asked on the stream, send signal or higher or lower, and that's not something that, I like doing. I've done it multiple times in streams. I've done it multiple times, right? Even just by posting charts, right? But that is not the mentality that I want to implement. I don't just want you guys to be relying on me. I want you to see this for yourself, to be able to do this for yourself, and to become better at doing it every single day or every single week, right? So that is even though, yes, I will be doing it, right? But the main takeaway is just to, understand the mechanics behind the reversals that occur. Understand why this happened. Understand and see that I'm always looking for, similar things, right? So, yeah. And now looking at the US dollar index, the euro, and the Great British Pound, right here, in this shaded area, this is Monday's low, right? Right here will be Monday's high, right? And this would be Friday's high, right? So due to the fact that they're in such close proximity, right? And that's why I, drew the box like this. Also, we had this right here, right? Which would be this was a new day opening gap, right? Slash volume imbalance. And right here, where you have the wicks not meeting each other, that would be a vacuum, what ICT calls a vacuum block, which I don't really pay much attention to. I don't really pay much attention to, and this is important, right? There's sometimes I say stuff like this and it seems like it's not important when it actually is, right? Here, where you see this right here, I will not consider this as important if, right, there is no new day opening gap here, right? So this would be not important to me unless there's a new day opening gap or a new week opening gap. Anyways, here you see price broke higher, right? And this is something that we were looking for, right? Price break higher, then continue lower, which did happen, right? Here, what do we have? There was SMT. And here, there was SMT, right? And this sent price higher, right? That's what sent price higher. Currently, looking at this type of price action, right? We have liquidity looking at the euro. We have liquidity above this high. We have liquidity below this low. What do we want to see? We have liquidity above this high again, right, for the British pound. of this high right here, and below these lows, allow liquidity below these lows. What we want to see, right? We want to see what price does, right, going into tomorrow. And the only thing that would allow us to, press a button, right? Well, for me, right, I demand high probability price action. For me, personally, since my son has been born, I've had less time that, I can use to be scalping every single day. Sorry about my throat again, right? So most of my trades are either intraday or intra-week, right? Or a scalp. And in my opinion, that's the best. Well, those are, right, the best ways to trade. Scalps are cool, right? But sometimes you will get, over yourself. You will have a series of wins which will make you seem as if you are, like God, which you are not. You will eventually lose sometimes, right? And when you're scalping, you will usually not be taking a look at the larger picture, the actual order flow of price, this is important right now because sometimes I'm just talking about everything is important, right? Which is characterized, right, by what? The price action which occurs during the days of the week, right? The days of the week are very important. The weeks of the month, very important as well for, price to construct or to build a one-sided movement of price. I hope that this was valuable to you. We will be back 30 minutes before FOMC on Wednesday, right? If you're trading, remember, right? Lock in, don't trade if you're, undergoing any type of, anxiety attacks, anything like that. If you're angry, don't trade, right? You need to learn how to control your emotions, right? You need to focus. You need to be locked in. You need to be like a robot, right? That's how you should function. So again, Wednesday we'll be back, and then Thursday we'll be back in the morning. I believe I already posted that. So I hope that you have a wonderful week, and I hope that you found something insightful from this today. Have a wonderful